Rotra Kapoor, and this is Coffee and Crypto, your one-stop shop for all things crypto. So how was your week? I had quite a nice week and looking forward to the weekend. And this week, in fact, is all about lots of crypto news coming into the fore. So India now has a taxation in place when it comes to crypto. But what about regulation? Well, Russia, the latest country to join in the regulation bandwagon. What is their regulation telling us, and will that perhaps throw a light into which way India will go? Also on the program, markets, so volatile. What is this freeze or the crypto winter, as they say? What exactly is that all about? Also, bonus is the explainer. So let's get right into that. Well, if you open, suppose, a crypto exchange app and invest in crypto, and you see a number of options there, several cryptos that you can invest in, right? But do you know whether you're investing in a coin or a token? Do you know the difference? Well, you all know by now that cryptos are different in the sense that these are meant for specific reasons or to solve a specific problem by using blockchain technology. But what is it that makes something like Loopring and Shiba, for example, different from Bitcoin, Ethereum, or even Solana? This time on Coffee and Crypto, it's back to the basics, and the difference between crypto coins and tokens is something you absolutely must know. So let's dive straight into that. Now, crypto coins is normally the native of a blockchain, like Bitcoin, Ether. They are mainly used for buying and trading purposes on their blockchains. Crypto tokens, on the other hand, can be forms of currencies or other valuable tools developed. For example, Ethereum blockchain uses Ether as their native currency, but tokens like Loopring exist on Ethereum's blockchain. Get the difference? Let's take the next example. Crypto coins are basically created to be used as digital money. The network keeps track of transactions involving their native crypto coins. Remember how we spoke about mining earlier? It's coins that are used to incentivize users to keep the crypto network secure. Tokens, on the other hand, represent deeds or tradable assets or a utility or a service like real estate or art. More, crypto coins, for example, are decentralized. They can decide how to manage their supply, how their network transactions are rewarded, and who they are rewarded to. You know the drill, right? Like, it's basically my house, my rules. Crypto tokens, on the other hand, are programmable. They run on software protocols made of smart contracts that outline the features and functions on the token. And the network is in the engagement rules, for example, when in Rome, right? By the way, have you ever wondered what if you want to use some applications on Ethereum blockchain, like if you want to buy an NFT made using the Ethereum blockchain, but all your crypto assets are in the form of Bitcoins? Well, there's actually a version of Bitcoin that's compatible to Ethereum called Wrapper Bitcoin, and that, my friends, is a token. And this token will have the same value as your normal Bitcoin coin. Now, do you understand where I'm getting with all that coin versus tokens thing? Well, give it a try. Send us your questions if you still see any problems understanding the difference between the two. All right, having got that, I hope at least, let's move on to the next part of the program today, and I'm really thrilled about this one. So, India just recently got its taxation on crypto in place. You like it, you hate it, whatever you do, but there is a rule now, and we're still awaiting a regulation. But guess which country has joined now the entire taxation and regulation? It's actually Russia. And talking to us about that, we have today Vivan Sharan with us. He's a partner at a Coin Advisory Group. Hi, Vivan. Welcome to CC.
Hi, how are you?
Good. How are you?
Good, not too bad. Survived COVID wave 3, so all good.
Oh, all right. Okay, I hope you're feeling better and get set ready to now get all your things in place when we talk about crypto and we talk about the regulation there. I'll request my producers to throw open some graphics there for our people to understand what exactly is this new regulation all about that we're talking about in Russia. So Russia also came from a space, Vivan, we're just trying to educate our viewers here, from banning, asking for a ban, now regulating. They have gone into about legitimizing 2 trillion asset class and in the world's 11th largest country, remember. The other thing to remember here is this is the second major regulatory cloud that we have lifted from the global crypto market in a month, and India last week took that deep step as well. So this is a very interesting space. Also in Russia, residents own, guess how much? 12 million cryptocurrency accounts and have about $26.7 billion worth of crypto. The country also ranks 3rd in the world in Bitcoin mining. Now, the regulation is said to be, Vivan, at par almost with how they sort of regulate other foreign currencies. So their outlook towards understanding and adapting to crypto has been very different. However, in some ways it is similar to India, at least the trends we have seen so far, where they say there will be a digital currency which will be run by the government, and then there will be other sort of asset classes, other commodity classes that will come under the radar, and there are now regulations and frameworks for that. What are your key takeaways from this?
Well, my key takeaway is that, normally in internet-related sectors or markets, Russia takes a very similar approach to China. So, for instance, on data localization, Russian rules are very similar to the Chinese because they want to ensure state control. But unlike China in this instance, Russia has taken the strategic call to regulate the crypto space. As you would recall, China banned all forms of crypto, including mining, etc., some time back, which came as a bit of a shock to the industry. But I think that was prompted by a general Chinese trend of regulating technology to make sure that, or to ban technologies where they feel like they don't have enough state control. And Russia has taken this strategic call, which I think is very instructive for countries like India, which, there is a middle path between sort of the liberalism and the free marketeering of, say, the Americans, a very rights-based approach of Europe, and a completely prohibitory approach of China. I think Russia is in that basket now of a country which has decided to take a strategic call to foster an industry that is growing, and really where you really don't have any option but to regulate if you don't want illicit flows of capital. And I think India has already taken a cue, as you said, so we are in good territory.
So, okay, hopefully taking on that. But if you were to compare, say, Vivan, from what Russia is doing to, say, what US has done or EU is looking at it as well, what do you think is a global framework we're actually working towards? I ask this because the Prime Minister has made it very clear that there seems to be that India is in a sort of wait and watch mode when it comes to regulation. The Prime Minister has said it in no other words that there needs to be a global regulation and framework when it comes to crypto.
So a global framework is ideal, but it takes time. And this is something that all government stakeholders are cognizant of. So normally countries have taken this approach of identifying the largest intermediary in the crypto value chain, which tend to be these exchanges. And as you're saying with the Russians, there is a general trend wherein countries impose certain obligations upon these exchanges in return for the ability of these exchanges to operate. So it's a sort of a safe harbor for exchanges and exchange-related activities. That's a preferred approach. I think it makes sense. It's practical at this stage. But what complicates things in the crypto economy is, of course, the level of decentralization also extends to exchanges. So there are a lot of decentralized exchanges. There's a lot of decentralized financial activity. And I think that's really where the international community will need to gather together and figure out a way to
track. That point about exchanges is actually valid. If I can just take our viewers through a couple of more points here. For example, Russia says that everybody will have access to the digital ruble, right, over there. But apart from that, only transactions which are bigger than, say, 6 lakh rubles would have to be reported to the Federal Taxation Service. They also talk about how banks can operate as intermediaries between users and crypto exchanges, but you will have to be a verified user with their identities in place, with a proper check and balance of sorts to ensure that it's not going, in the wrong hands, or is not perhaps under the radar, so to say, one can say that, of the government, right? Does that defeat the purpose of crypto? Does that add to it? What is that trend?
So, as you would have seen with the recent recovery of a lot of laundered money, in the Bitfinex scam, I'm sure you've covered that in the past. The largest sort of crypto heist, in a sense, was by a couple staying in New York, and the FBI busted that. Busted the couple really a couple of days ago, and they had upwards of billions of dollars worth of Bitcoin, and that they had kind of mined from Bitfinex, which is an exchange, not mined but stolen.
Yeah,
and it just goes to show that crypto assets or cryptocurrencies are actually more traceable than cash, and it is contrary to the notion of, this complete anonymity and murkiness that is associated in popular discourse with the crypto economy. So for those who believe in this utopian fundamental that crypto somehow enables anonymity, the FBI has bad news for you, and so do Indian authorities that have done a lot of work. For instance, Delhi police has done work around busting rackets, because it is on a ledger which is immutable, and if authorities get around to supervising activities in the crypto space, they will find it actually much easier to trace the flows of money.
Right.
So
this is how government should be actually looking at it. I have last few minutes, Ivan, so I want to talk about taxation before we miss that altogether. In Russia, for example, there are slabs of taxation. It goes from 0% to 50% altogether. In European Union, also similar. There is a range from 0 to 50%. If I'm seeing the ones in United States, also there are different clauses that sort of come into place. Do you think currently a blanket 30% in India works, and how does it stack up against the world?
So it's very clearly an indication of how the government of India thinks about the crypto market and thinks about the risks associated with it. Until today, technology didn't pose such a bottoms-up risk as it does today, when everyone has access. And a lot of the crypto guys have themselves been saying, look, 15 million, 20 million people trading in our exchanges, and most of them from tier 2, tier 3 cities. That's not necessarily a positive for the government of India, right? It's a risk that they need to mitigate. Tomorrow, if you had UP elections or Goa elections, and suddenly you had a sudden stop in some crypto markets, and values fell rapidly, there are political implications of these things. So I think the thinking right now is to limit the liability of the political class, in a sense, by I guess, throttling the retail appetite to an extent, where they believe that only people who are at a higher income bracket, who are in any case sort of paying these extravagant taxes, should be sort of trading in this market.
Right.
But I think over time this will normalize. So far, what we've seen in the budget is definitely good for an industry which was under a complete cloud of uncertainty. And I think gradually we'll have to move towards a proportionate way of taxation.
Right.
And I'm sure industry and government will interact on that in the days ahead.
Well, we sure hope that happens. Thank you so much, Ivan, for your thoughts and joining us on CC. With that, we're going to slip into a break. On the other side, we talk about the latest volatility in the crypto market and what exactly is this crypto winter everybody keeps talking about. That's in a moment from now. Welcome back, and now let's go to a panel and discuss crypto markets for a bit, which have shown very sort of trends that nobody is really even able to pinpoint on what is happening and why exactly is that taking place. Joining us now is Siddharth Sogani, CEO of Cribago Global. Hi Siddharth, welcome to CC. Also we have with us Pranav Sharma, founding partner at Woodstock Fund. Also with us Saurav Sharma, partner at Jump Capital. Siddharth, let me begin with you. Could you just explain this to our viewers first? What exactly is this crypto winter, crypto freeze that seems to be the trend word these days? What exactly does it mean?
Hi, Sonal. So, yeah, I mean, crypto in the last 10, 12 years of the crypto markets, we have seen that the market goes up, catches a trend and corrects very steeply. And once it gets into that correction mode, it goes sideways for a while and comes back again. Fundamentally, for Bitcoin, there are reasons which are the network hash rate, network difficulty levels, and also the block halving. Every 4 years, there is a block halving where the block reward of Bitcoin goes into half. So it started from 50, then it went to 25, then 12.5, and so on. So whenever there is a block halving, just a few months before that, we observed that in anticipation of price rise, we come out of that sideways movement and we get into a much market, a bigger market with new money entering. And
so
when
in
the
your
new
opinion,
money enters,
are we in a crypto winter right now?
Well, this cycle is different. Here, I mean, till 2017, there was a crash in 2018, and we didn't see any excitement after the crash happened. But now this cycle is different because a lot of new and institutional money has come in. So we are going sideways. Of course, this has now the problem is, since the new institutional money has come in, the interest rate directly impacts the price action. So it's even though fundamentally it's a debt-free instrument, but due to the interest rate changes, which Mr. Powell was a little hawkish this time, but he didn't do anything. But it does impact the entire price action, right? So right now we are technically in a winter, we are in a sideways market, but this won't last long because right now is the time for relevance of this of the crypto, since it's a debt-free instrument and a non-correlated asset. We are expected to come out of it much sooner.
All right, so that's what Siddharth feels. Pranav, what about you? Winter's coming has been there for a while now, but is it truly here, and how long is it supposed to stay?
So I think first of all, thank you, Sonal. And I think winter is coming is something which was made famous by Game of Thrones. So it's very much something that crypto fraternity sort of loves this statement. Definitely winter is not yet there, and this time it is different. I think a lot of these action happened because of the Fed anticipation of the Fed interest rate hike, which did not come through. So it also creates a little bit of overhang. It definitely led to various other markets correcting, equity markets globally, and definitely it had a fallout. So I think one key point I want to make here is that from a macro standpoint, crypto markets or Bitcoin is not decoupled from the other markets yet. But there'll be a point at which so there'll be a point at which Bitcoin will be decoupled. People are saying that a lot of this liquidity which is out there in the market, which at least in my opinion, doesn't seem like the Fed would have even enough firepower to go for more than 50 basis points of hike in any scenario. But in case that goes much more beyond, then there could be a scenario wherein there could be much more, I would say, correction in the markets.
This observation, Pranav, that you're making is something that I've been sort of thinking about as well, and sort of weighing on that. When you actually see how equity markets, stocks, etc., across the world have been sort of following the same trend, the trajectory seems to be pretty much the same, which is not something that we had seen with crypto earlier. So is that, I mean, how are we to analyze that? What does it tell us about crypto markets and how people are trading?
Yeah, so well, first of all, thank you for having me as well. So I think the general, there are, I would say 3 or 4 core factors which kind of drive this, and we are starting to see definitely a lot more coupling towards the core markets, right? I mean, as Siddharth mentioned earlier, Bitcoin was the primary asset, and so the 4-year mythical cycle, where the hash rate was a big driver for these kind of cycles. Then there are sort of very crypto-specific nuances of people, very small folks who are in the market, control a lot of positions, leverage long positions, and when you take those positions, when the liquidations happen, it really escalates things. But I think now it's significantly more coupled to the macro economic aspects. One of the reasons it is. So one of the reasons is because the institutional money has significantly grown in the market, right? So if a lot more institutional money comes to the market, then as some kind of macro hawkish events happens, like Fed rates or Russia thing, everyone moves to safe haven assets, and then hence same institutional people are now moving their funds, all the funds, no matter what asset class they're put in. If there's high risk equities or high risk crypto, they will move it away, and that will cause the bear market. So I think the coupling of that thing is happening more because as more institutions come to the market, their basically actions when something negative happens on a macro perspective impacts the crypto market as well. And you're going to see more and more of that. I mean, it is still inflation hedged asset on a Bitcoin perspective, but earlier it had nothing to do with that. I mean, it was very small institutional market, mostly retail driven, who didn't care about macro. Yeah, I think the fourth is generally, I think, in the sense like the linkage of the nuances where we are seeing less and less reliance on Bitcoin, right? So the Bitcoin hash rate used to be the big driver, but now Ethereum and a bunch of other assets are now significantly bigger as well. And so you're not reliant on the Bitcoin's mythical 4-year hashing rate as well. So I think all those things are now kind of, mashing together to be able to have pretty different impacts. And I think we can see kind of interesting models in the future.
All right. So what I'm gathering from everybody here is that winter is here. It might not be a long one, however, is what they're saying. But watch this space to know more about what exactly is happening in the crypto world. Thank you all for joining us in this week's episode of Coffee and Crypto. That's all we could pack in today's edition. Take care. See you next week. Bye-bye.